Good morning, Jags. This is Fahad. Today is Thursday, September 10th. Let's get started. The chart that you're looking in front of you is Night Swift Transportation, KNX. KNX is the symbol, and it is setting up for a technical breakout to new 52-week high. This is a trucking company in the United States, very well known and everything. And right now, purely on a technical basis, this is attacking an important VOP resistance level, which is around 4750 on rising volume over the last couple of days. As you can see, for the last couple of times, it has come up to this resistance, but it was not able to break out. So there was first attempt, second attempt, third attempt, and yesterday we started to see a breakout from bull flag. And for the last 3 days, we are seeing rising volume. Another way of looking at it is to simply go to stockcharts.com, where potentially you can get a better view. And if you look at this, here is the VOP line. You can see how multiple times the stock has failed through that. And in the last couple days, it is attacking that call it $47 even resistance on rising volume. I think today, tomorrow, sometime pretty soon, it's going to break out through that, and we're going to see potential run to well above $50 per share. So keep an eye on this. I added this to my watch list last night. Now, also keep in mind while you have night transportation in your on your watch screen that FedEx, FDX, will be reporting earnings on September 15th, which is next week after market close. Now, a couple of days ago, last week, in fact, in the chat room, I provided a bullish earnings preview on FedEx. Many of you know what that one was, and here it is. Once again, this is the summary of that. And this was discussing when Bank of America came out last week as well, raising their earnings estimates for the quarter as well as for the full year, and also raising their price target. And a couple tidbits over here, just as a quick reminder. The channel checks going into the earnings next week in FedEx is showing unprecedented shipping demand into peak season. This is mainly because we have a combination of two very important factors. We now have a combination of declining unemployment rate in the country, right? So we hit a high of whatever 14, 15% that was during the time of peak pandemic, COVID, and now we're back down to about 8% rather very, very quickly. So we have rising employment or declining unemployment rate in the country. So that's benefiting. And the second thing is that we've also seen a material shift naturally, as you all know, from brick and mortars to e-commerce penetration. And as a result, that's also helping FedEx. So FedEx is hiring 70,000 seasonal workers for the holiday season this year, more than 55,000 that they hired, temporary workers that they hired last year for the holidays. So they're more bullish into the holiday season this year than they were last year. In terms of total seasonal worker hiring, it's up 27% year over year. The FedEx also launched a Sunday residential delivery service, which now continues to expand, and it has now reached 95% or is expected to reach 95% of the total population, US population, by September 13th. And then lastly, for the long-term horizon, FedEx also talked about that the U.S. packages are expected to accelerate to 100 million packages per day by 2023. This was originally the target that the company had set out for 2026, but given the acceleration in e-commerce trends that we have seen, they moved that target forward, and now they're expected to reach that by 2023. And overall, the B2C business continues to fire on all cylinders. So this is the quick earnings preview on FedEx. But on a very, very short term, while FedEx will report earnings next week, most important thing is that this is really just a view on a broader transportation sector. Night transportation success, KNX is one of the better looking charts in the short term with the potential technical setup for breakout. Now, with all of this said, yesterday in our conversations, Chronicle brought up an interesting point, and in which he talked about truck spot rates moving higher, and as a result, this is very bullish for the entire transportation sector. So last night I spent some more time digging through to find out exactly what's causing the spot rates to move higher. And what I found out was actually this news that we were not aware of. This came out on September 9th. This comes out from the Commercial Vehicle Safety Alliance, which is basically a nonprofit organization, and it's government backed essentially. And what you may not know is that the Commercial Vehicle Safety Alliance, or CVSA, is conducting its annual international road check from September 9 to September 11th. This was originally supposed to happen in the month of March, but now because of COVID, it was delayed by 6 months, and now it's happening in September in the next couple days. Road Check is an inspection and enforcement initiative where CVSA certified inspectors in Canada, Mexico, and the United States conduct commercial motor vehicle and driver inspections at designated locations. Of the 3.36 million inspections conducted during Road Check in 2019, 953,000 driver violations, or 28% of total reviews, were uncovered, according to the U.S. Federal Motor Carrier Safety Administration, or FMCSA data. With driver shortages already constraining an extremely tight trucking market. And how tight is the trucking market? I'll show you a couple charts here shortly. Um, uh, Basically, we have about 100,000 less CDLs right now issued in the past 7 months because of COVID versus all of 2019. And so therefore, with the trucking market already tight, and this inspection taking place at a time when we have tightness in the inventory, at a time when we're expected to see about 30% of the total reviews to come out with some sort of driver violations, this is putting a near-term pressure or squeeze on the spot rates into a peak holiday season, which is coming up in October, November, and December, all led by e-commerce. So it's a combination of multitude of things, but this is one of the most important ones that is pushing those rates higher. And this is lifting rates across all kinds of various bodies of trucks, well above the contract rate prices, according to a website called dialatruck.com. And so keep this in mind. Now, to quickly show you what I mean by this, here is a chart that comes from Bank of America. Take a look at that surge in the trucking rates over the next. This is the actual expectations according to a large survey that was done of shippers. This survey is showing trucking rates expected to rise over the course of next 3 months. This is just huge, huge, sharp surge. And this is happening at a time, now let me minimize this and put this over here. And this is happening at a time when shippers' view of capacity for the next 3 months is constraining. So you can see what I mean by this. When you put these two charts together, the one on the left-hand side is showing you how the spot rates are moving higher, and the one on the right-hand side is showing you how the inventory is being constrained. And then this important inspection that is taking place is going to only, push that even forward. To give you some more quick idea on this, on the rates, the truck capacity indicator, which is another third-party channel checks that came out for the month of August, showed that it declined to 31.6 versus 34.6 last issue, down 9% sequentially, and it's down 56% year over year, equating to the largest decline since February 2018, indicating shippers are seeing an extremely tight capacity environment going into a peak holiday season. The rate indicator, which measures shippers' views on the direction of truck rates, is up at 75 level, the index that is, which is up 3% sequentially from the last month's survey, and it is now up 94% year over year. Now it's at the highest level since late 2018, suggesting pricing expectations are rapidly rising. So there you have it. And this combination means that, along with this story in the background, that KNX is going to break out And I think this thing should easily run to 50, 55, maybe even $60 per share if the market gets a wind of this and we start to see forward consensus estimates start to actually move higher. So that was my view on the stock, on the sector this morning. Jay?
Morning, everyone. Today, actually looking at West Pharmaceuticals. WST is the ticker. This stock was brought up yesterday by one of our clients. So last night decided to take a closer look. And I might actually compose a homepage article later today if need be. But for right now, for those that do not know, West is a global supplier of packaging components and delivery systems such as rubber seals and stoppers that are used in vials and syringes for injectable drugs. This includes potential COVID vaccines in development. According to B of A, the company has a 70% market share in the injectable drug rubber packaging components market, and its products have achieved close to a 100% participation rate. Looking at their last earnings, company beat on both the top and bottom line. Net sales were up 12.2%, and the company raised both full year EPS and sales guidance. A couple items of note from the call. The majority of their organic growth in Q2 was from their base business, while it saw some incremental growth from COVID-19 sales. Meanwhile, the company is preparing for a potential volume surge that could come if and when vaccines are approved for human use. In the Q&A session, the B of A analyst did ask a few questions. Now, management commented that the company is seeing more interest from their Fluorotech product line, and these are again the rubber stoppers for glass vials, for example. Let me just quickly show you a picture of what I'm talking about. So just share the picture if you could bring that up. So yeah, the top is their Fluorotech product line. And then another item that they talked about, or the B of A analyst questioned on, was in terms of the glass vial supply side. And he wanted to know more about the Crystal Zenith product. And this is a little bit different than their glass vials, but management talked about how this is a proven technology in the marketplace right now, and the demand that they have for Crystal Zenith is increasing. In fact, they are in the process of increasing capacity in their Scottsdale, Arizona facility to address the potential increase around insert needle technology. So those were just some of the items I caught from their conference call. Like I said, I might kind of compose a homepage article and publish it later today with more thoughts.
Excellent stuff over here. This has been such a hot stock for quite some time. And, there have been a lot of direct beneficiaries of COVID, but aside from the ones that are very sticky in nature, which are mostly in the tech space, I've taken some of these beneficiaries with a bit of a hit and run kind of short-term pop kind of a scenario. Some of them are vaccine developers, some of them are like hazmat suits, some of them are bottle makers like this one, and filmmakers. There's all kinds of things. What I'm most interested, if you end up doing an article on homepage, and I'm sure clients would like to know this as well, is whether the business growth that has seen a surge from COVID is actually sustainable for more than just a quarter or two, or whether this was really just created by a phenomena that happened during the shutdown, and we're going to see more of a decelerating trend from that for the several quarters to come, because the stock is appreciated considerably over the course of last 6 to 8 months. I mean, this thing has more than doubled. It's up 150% from March lows, And so need to be mindful of that a little bit. Where it is in the growth cycle, is the growth maturing? Is the growth still early stages? Are we 40%, 30% through it? We still have a few more quarters of acceleration ahead of it. More important thing is the rate of change in the growth rate. It's what matters for high momentum names, and we need to discover where we are in that rate of change scenario, and that will determine the direction of the stock. But interesting stuff. Looking forward to whatever you put together. All right, Chronicle.
Good morning, everyone. So I'm looking to open a new long position in a company we previously covered on Chinese Tech Demystified. The company is Youdao, symbol DAO. If anyone's wondering what this company does and what it's all about, they can watch episode 3 and read the research note for that. One of the drawbacks of doing the series format is, of course, we can't accurately time when we want to be entering these names. And I did mention in both the note and the slides that we were taking a cautious view because this is a speculative company that still has a couple of major questions it needs to answer in terms of future growth. So I've been watching how this stock has been declining since. And if you were to read pages 7 to 9 of the note, you'll know that I'm not all that surprised about this sell-off, which is why I recommended a cautious view. But that said, this sell-off has gotten ridiculous now, and even with my cautious view, I think the market is currently pricing in forward expectations, which are way too low. Even though Youdao isn't aggressively pursuing the rural markets yet with their online education offerings like some of their bigger competitors, and even though the pandemic has resulted in some scheduling problems, I am still expecting robust top line and student enrollment growth. Looking at the latest estimates, consensus is expecting the company to report a negative 28% decline in revenue, which is a ridiculously easy bar because even in my most pessimistic scenario, I cannot imagine the company reporting anything worse than down single digits. And so with the stock having tumbled all the way down to mid-20s, I'm now turning from cautious to bullish, and I'm looking to be buying Youdao off of whoever's selling it at these levels but because of near-term negative sentiment surrounding Chinese stocks at the moment, I might turn this into a relative trade by shorting the Chinese index. Don't know yet. But technically speaking, the stock has come into very strong confluence of support here. And so even if this long entry doesn't work out immediately, then at a minimum, I'm expecting a basing formation to establish at this level.
Yeah, I'm glad that you actually brought this up because I have actually I run a watch list of my I have a watch list set up basically for all the stocks that we discuss in conversations, as well as Chinese Tech Demystified series that we are running, or anything else on Jaguar Media, because I feel that every day is every day there's so much great content that is produced in Jaguar Media, and there are ideas there, and sometimes what they need is a technical enter signal, a technical signal to enter. Now is the time to enter, now is the time to exit. So the bull case or the bear case are there, they have been presented, they have been fully discussed, and it comes down to the point of entries, making entries, and this is definitely one of those entries in my view. I'm a big fan of buying things on VOP supports and selling things on VOP resistances. I love the bull case that was presented in the series. So for those who do not know, here is that video, 22-minute video that goes in depth discussing what this company does. If you go to the website, it's all free. Just go to Jaguar Media. You'll be able to search it and find it there. And under it, you'll see the slide deck and the total research note presentation. And if you simply click on this, the entire article will show up as well, just discussing the bull case that is presented in this video. Now, purely technically speaking, when I look at this chart now, it's right here at the VOP support, should rally from here. MACD and RSI are oversold, and if it starts to move off of this base, you're going to start to see minor resistance come into play around 32 to 33, and then a bigger, thicker VOP resistance doesn't come into play around 37. So for this to go from 26 to 37, that'll be a substantial 30 to 35% move to the upside, and I think that can be easily had on this recovery as the stock starts to bounce off from this major VOP support. So this is the level, 36 to 37. Look for that rally. I think it's gonna happen, and the case is quite strong to just ignore. Great stuff. Thanks for bringing it up, Chronicle. Avo.
Morning, everyone. Looking at Camping World Holdings, CWH this morning. Just more than anything, it's a technical setup that I like, and basing, or at least going on the another good report of RV shipments that came at the end of August. But this is on a lag, so it's actually for July. There used to be less lag. There used to be this the previous month, but now it's 2 months delayed. I posted a chart in our chat room if you want to just bring that up, Fahad. And so we'll continue to see improvement or increases in shipments. So in July, there was a 53.5% increase in shipments year over year. Now, of course, partly this is because in March and April, shipments declined. For example, in March, shipments were down 82% year over year. So there is a backlog there as well. However, if you were to add the total of the year's shipments and divided by the amount of months that we'll have so far, the number is pretty interesting. It's still a little under 2019 numbers as a total, but it is quickly catching up. And with recent, well, not that recent, beginning of June, there was a study done, or some research done, survey, I guess, that showed that a lot of people are still very interested in RV trips going forward. From 12 months, it said, so I would imagine it tapers off during the winter, but still remaining strong. And
Yeah.
technically presents a good entry point here, I think.
Yeah, I was just gonna say, man, what a beautiful looking technical picture over here. This is the kind of stuff that is fantastic for swing long entries as the stock starts to take new leg higher. So you've got the RSI bull cross, the MACD bull cross, you got the volume picking up the last 2 days. The stock is breaking out through downtrend resistance off the base. It is starting to basically leave all of this VOP congestion level behind it. So this is clearly a start of new leg higher. At a minimum, this should carry this at least to retest these levels, which was basically the top around 38. And considering the volume and the patterns involved over here, should easily take that out and then further move up all the way to $40 per share. So this looks fantastic. Should $42 per share, actually, I would say would be my price target on this one. So this one to go from 35 to 42, that's a substantial move on nearly 20% that could be had in this stock. And on the monthly RV shipment standpoint, the data is good, no question about it, but I just want to point out that this too, you need to be mindful of a little bit of any kind of decelerating trends over here, because this is a phenomenon that is going to play out in a lot of stocks and sectors that were immediate beneficiaries of a very sharp rebound from COVID in March and April and May. But then you're going to start to see beyond June and July, and then going forward from here sequentially, whether we're looking at month over month or quarter over quarter, a bit of a decelerating trend. But now, as long as the growth still remains positive and holds near the highs of the year and continues to track at that level, I don't think it's going to be the concern, especially that considering these stocks have consolidated now for the past 2 months or so, and it's not just CWH, Winnebago, WGO, and Thor. They have also consolidated recently, but be mindful of that decelerating trend. We don't want to see that turn negative again. If we start to see some excitement from COVID basically fizzle away. That's it. Fantastic update. Good technical picture. All right, guys. Love it. Really good coverage today. Thank you, everybody. We'll see you in the chat room shortly.